Welcome. You are listening to Purpose-Driven Wealth, the podcast for empowered investors. If you're an investor who is tired of playing the Wall Street casino, stay tuned. On this show, we bring on industry experts to discuss leading strategies to help you make empowered decisions with your hard-earned capital. And now, here is your host, Mo Bina.
Welcome to Purpose-Driven Wealth. I'm your host, Mo Bina. Today on the show, we have Paul Moore. Paul has contributed to Fox Business, the Real Estate Guys radio show, and he's a regular contributor to Bigger Pockets. Paul is the author of 3 books and has been featured on over 200 podcasts. He's also the founder and managing partner of Wellings Capital, a real estate private equity firm. Paul, welcome to the show.
Hey, it's great to be here, Mo.
Yeah, thank you for coming on. Actually, I should say thank you for coming on to the show again. This is actually the second time you've been on.
Yeah, thank you. It's an honor.
Yeah, thank you. The last time you were on the show, which was about a year ago, I know we talked about kind of the economic landscape, and we talked about at that time kind of the growing inflationary pressures in the economy. Since that time, there's been several rate hikes. We've had a number of bank failures, geopolitical conflict, between Ukraine and Russia, more and more countries globally moving away from the US dollar. What are kind of your big picture thoughts on all of this, kind of like this fear, uncertainty, doubt that perhaps a lot of investors and a lot of people out there are feeling given all of this kind of like negative news?
Yeah, absolutely. I'm a big fan of Howard Marks, and he's got a book called Mastering the Market Cycle. And in that book, he talks about how there are always ups and downs. There is, always going to be people that, that on the way up, they said, there's no price too high for this wonderful asset. Like everybody needs a place to live. I heard, a famous multifamily, syndicator that we all have heard of say, it doesn't matter what you pay for multifamily, just get it, because you gotta, everybody needs a place to live. And, I just think that that's proving once again to not be true. It's, with all the economic news out there and with everything you just mentioned, obviously there's a lot of fear and uncertainty right now. And people are, some people are scared and holding back from investing. Other people are smart and they're holding back because, Buffett's, for years had $100 to $130 billion sitting on the sidelines in T-bills waiting for the right investments. And so, as Howard Marks says, the best investments are done in the worst of times, and the worst investments in the best of times. And so we're coming into what may not be the worst, but a very difficult time. And therefore people should be ready to, actually get have a lot of opportunities they haven't seen for the last decade.
Yeah. There's been a lot of cap rate compression in a lot of sectors of commercial real estate. And in fact, a lot of people in the media and even like Elon Musk, they've talked about a possible commercial real estate crash, especially like in the office and hotel sectors.
Right.
And some have even called for potentially a crash in the residential real estate sector as well, too. And that kind of adds to, especially to real estate investors, to kind of see like these prominent people talking negatively about commercial real estate and residential real estate. How do you kind of like digest that component of things?
Well, this may sound like a glib answer, and I don't mean it to be. But Warren Buffett and Charlie Munger have known each other for almost 70 years, almost 60 years, I think. They've been working together for over 50. And they claim that they've never had one single conversation about investing or divesting of an investment based on the economy. They've never even had the conversation because it's not important to them. What matters is finding value. And for, for stock and company investments like they make, finding value means finding undervalued assets, finding Coke when the market penetration in America was X, but the market penetration in the other 200 countries in the world was only a tiny fraction of X. and Coke had all that runway. Or finding Apple, getting Apple when it was, what was it, $15 a share? And now it's at least 10 times that, I think. Spotting these, not trends so much, but that's part of it, but basically finding undervalued assets. Here's an example. A friend of mine who we invest with bought a self-storage facility recently, as in 6 weeks ago, that had a whole bunch of homeless people in it, a whole bunch of other tenants that weren't paying, total mess, great location. The previous owner was charging $60 a month for a 10 by 10, and the market rate around that area was $148 for a 10 by 10 unit. When you can find deals like that in the worst economy or the best economy, it doesn't matter, because the deal itself, the value of ad opportunity, if you want to call it that, of buying that for cash, stabilizing it, improving it, adding a website, putting a new name, a new sign, new manager, new nice, cleaning out the bad tenants, and then financing it at that point at a low LTV, like 50% fixed rate. The value opportunity there is great in any market. And that's the way we think. We're looking to do the same thing in a bad market as we do in a good market. And that's find, Buffett style real estate opportunities, value real estate opportunities.
Yeah, nicely said. Finding value, finding undervalued assets.
Right.
Value to it. Yeah.
Right.
When we spoke last time, you'd kind of talked about how you had transitioned away from multifamily real estate into other asset classes like self-storage and mobile home parks. And in the last interview, we talked about, kind of like the compelling case for those asset classes. And I guess you've also kind of gone into a new asset class within commercial real estate, which is RV parks. Can you kind of start and talk about first of all, what are RV parks? I think most people know what an RV is, but what exactly is an RV park, and why do you think that's a compelling asset class?
Yeah. So Mo, you didn't ask this, but I'm going to say this one comment here. My favorite book is The One Thing by Gary Keller and Jay Papasan. And it broke me. It cured me of being a shiny object chaser, of trying to, do 10 things well at once, which it's cost me millions of dollars over the years trying to do that and doing it really poorly. So to be clear, we only have one asset, and that is our fund. Wellings Capital runs a fund, and we have 6 or 7 asset types that we invest in, but we find operators, the best operators that we can find to run those. And so we invest in self-storage, mobile home parks, RV parks, etc., through these other great operators. But we have wanted to do RV parks for years, Mo, and we thought that there was a compelling case for it. But we could not find the right operator. We couldn't find the operating partner. That's why I shared all that, so it wouldn't be confusing now when I say that. We look for operators who can buy really well, who can find deals that other people aren't finding, who have a vision for improving it. Basically a Michelangelo strategy, which is basically Michelangelo, the greatest sculptor of all time, said, I see an angel, but it's trapped inside this stone. All I have to do is chisel away the superfluous material to get to that angel. And it's the same with these operators. They chisel away the bad, like that, self-storage thing I mentioned 3 minutes ago. They can chisel away the bad, but they can also see the potential for what could be. And so we found an RV park operator who's really good at that. And so we finally started investing with them. And man, I've got a lot to say here about RV parks. RV parks basically are the place where people go when they have an RV. It's not a mobile home park. That's a place, where people live permanently. But this is a place where people take their RV, they set it up. They might spend 2 or 3 days, 2 or 3 weeks. There's other types that are longer term in nature, but there's a variety of different types of RV parks. RV camping has grown between 2001 and the pandemic about 62%. So there's already a trend. But when the pandemic hit, now, Mo, remember, we were all, not all of us, but many people were scared sitting in their basements during COVID, not knowing, not even wanting to go out. But RV camping increased at a rate of, well, the new RV campers in 2020, the worst year of the pandemic, the scariest year, RV camping increased fivefold. I don't mean the whole world universe did, but I mean the number of new RV campers was 5 times the previous record year, which was 2019. And 26% of the RV campers were brand new to camping in 2020 during the pandemic. And a huge percentage of them said that they want to buy an RV in the next 5 years. And so while RV camping has done well, it was just accelerated. That trend was accelerated by COVID. And you can see some of the reasons. People wanted to get a vacation. They wanted to get out. They didn't really want to be in a hotel room or a plane next to other people. This was an opportunity to do that. And so RV park camping has just exploded since COVID. The problem is COVID is a temporary phenomenon, and you've got to ask yourself, is it going to continue now that the pandemic's died down? And we'll address that if you'd like to.
Yeah, please do, because I was thinking the same thing. It's like, wouldn't people who maybe got into RV camping, at the beginning or maybe during the pandemic at some point now say, you know what, I'm fine with, traveling on a plane and going abroad or domestic and staying in a hotel and so forth. Like, what's kind of like for lack of saying it, a retention rate of those people that first got into RV camping? How many of them is maybe projected to kind of stick with it and continue to do it?
Yeah, it's really hard to say. And I'm not going to stand here, and say that I know that it's going to keep growing because of this or that. But here's some interesting facts. Number one, we have a first in world history, Mo. And I mean, literally the absolute first in world history. And that just happened. And that is the remote working revolution. Mm-hmm. There's a lot of reasons we could say that happened between, laptops and iPhones and social media and Zoom and all these things. But let's face it, the pandemic just accelerated that dramatically. Everybody knows that. There was already like a 4-fold increase, I think it was, in remote working from in the last decade before the pandemic. It was a huge increase. And again, you and I are probably both able to work remotely. But a lot of people through history, obviously the vast majority of people cannot. Well, now it's been proven that they can. At the same time, a lot of those people were thinking about their lives. Why am I working 80 or 90 hours a week in Manhattan when my kids are in daycare and I don't even see the kids? And, why am I doing all this? Life's short. I just watched, this person or that person die, and I know that I could die. I'm going to reevaluate my life. And my employer is now saying I can work from home. Maybe I don't need to stay here in New York or New Jersey or Chicago or LA. And as we know, a lot of people are moving to remote areas. They're moving to Virginia and Utah and Phoenix and, Texas, Idaho, lots of people, but a lot of other people are taking vacations in a different way. A lot of them are working from their vacation with, basically through RV camping. Somebody with an RV can sit and, do their Zoom and phone calls while their kids are playing putt-putt or swimming in a lake or, doing, all kinds of things at a really nice RV park. And the parents can be there with them and they can work remotely. Heck, I even know a CEO of a tech startup, real estate tech startup, who actually went on the road full time with his RV. He outfitted it to work out of. So we've got this remote work revolution, which has skyrocketed the demand for all kinds of things, including people who go to RV parks. A second interesting issue is for people like me, I'm not very mechanical. And I'm a little intimidated by driving a big RV. What happens if it breaks down? What happens if, you know, I don't know how to hook up the water and sewer at the park? I mean, I'm being honest. Well, there is a new, fairly new sharing economy program, and that is RV Share and Outdoorsy. These websites allow people to take an RV, which was sitting, you know, there's 10 million RVs in the US, and they sit vacant, they sit idle, I should say, for about 49 to 50 weeks a year. All right. Well, now they can be turned into a rolling rental unit. And a friend of mine in Colorado bought one about a year ago, and she put it on Outdoorsy and RV Shares platform. She leased it out for 6 months. She paid 80,000 for this RV, and she made 40,000 clear, free and clear, in the first 6 months of renting it out last year through one of these platforms. But what that means is, think about it. If that RV would have been used 2 weeks a year and now it's used 28 weeks a year, you know, 6 months and 2 weeks, think about all the pressure that's creating on RV parks. My neighbor has a big Winnebago, and he says it takes him, like, he has to reserve spots at nice parks for a year in advance. And so it's really create a lot of pressure. And for the right RV park in the right location, I mean, many of them are doing very well.
It's interesting. So when it comes to RV parks, is it just one different type? Are there multiple types of RV parks? What are the classifications within the RV park world?
Yeah, there are classifications, but there are 4 types that I've identified. Number 1 is an overnight park. That would be a park that's kind of near a highway, maybe on the way somewhere else. People stop on the way. They might stay 1 or 2 nights. The opposite of that would be the extended stay park. And I said that, you know, this is not a mobile home park earlier, but that's similar to a mobile home park. So the RVs are parked there almost permanently. Some of them have decks and skirting, and they're there year in and year out, and the RV owners pay the lot rent a year in advance sometimes. A third type is workforce housing. We saw a lot of this in North Dakota in the oil fields when we were building multifamily up there in 2011 or so. And workforce housing is when, you know, people live anywhere in the country, but they're going to work for a while on a pipeline or an oil project. And those RV parks do really well. And then the fourth and my favorite type is a destination RV park. Now, there's 2 types of these. One would be an RV park in a destination, like near Zion National Park or near the Grand Canyon or near Branson or Gatlinburg. Another type would be, and many of these overlap, they become the destination, meaning they have a lot of amenities, lots of value adds, lots of different things that they've done to upgrade the park to turn it in some cases to sort of an amusement park. And they have lots of different activities like pools, a water park. I mean, these water parks cost $2 or $3 million to add to the RV park. They have swimming and fishing lakes. They have mini golf. They have dog parks, trails, hay rides, face painting, t-shirt painting, gem mining. They have all kinds of value adds. They have a drive-in. Some of them have a makeshift drive-in theater, a human foosball game. I'm thinking of the place that I stayed with my wife when we were doing due diligence, and they also have Wibbits.
What is that?
I was hoping for that reaction. Wibbits on a swimming lake. Wibbits it's a floating obstacle course, and you can just Google that if you're interested. I'm talking to the listener, obviously. WIBITS, Wibbits, and that is a floating obstacle course. It costs about $200,000 or $300,000. It's anchored down in the lake, let's say by a beach, and kids pay $17 an hour in some cases to play there. And the total one of these can generate, it's a huge floating obstacle course, it can generate up to $1,000 an hour during the season for the RV park operator. So it's a really cool value add, and it's a lot of fun for the kids. It's like basically it's just a big obstacle course.
Wow, I'm definitely going to have to look that up because I have never heard of that, and I'm having and I'm trying to imagine in my head what something like that even looks like.
Yeah. Well, if I could share my screen, I'd show you. But anyway, maybe we'll do it later. But anyway, these value adds, I mean, some of those are charged, items like they have concessions. Some of them have a wedding venue. Some of them have, limited food service. Lots of ways, gift shops, things like that. And one big value add is of strategy, I should say, would be to buy the park. Let's say it was a park in a great location with, let's say, 100 RV sites, but lots of farm or rural land available around it. They buy and they might triple the size of the park. That's a huge upgrade, obviously, and a potential source of value for investors.
Mm-hmm. In the work that you're doing with your operator, are you targeting specifically just value add opportunities, or are there opportunities for new construction as well too? Because you mentioned about the growing demand in the RV park space. What is kind of the focus that you're doing with your operator?
Yeah, good question. So far, we've only been investing in value add opportunities. I mean, one example was a property acquired for $3 or $4 million, and the all-in budget for it was about $18 million or more when all the value was added, when it was expanded, and they added, all the different features. So, yeah, value add, they typically, the ones we've been investing in have had, not cash flowed the first year or two, but after that, they're projected to have very nice cash flow.
Is the RV park space kind of similar in a lot of ways to like mobile home parks and self-storage, and that historically a lot of these types of assets have kind of been like family owned and operated?
Yeah.
Is that kind of what happens in the RV park space as well?
Yeah, it's exactly right. We found in the RV park world that there were 2 or 3 big players. I'm thinking of institutional REITs like Sam Zell's, Equity Lifestyles, or Sun Communities. And then there's a whole lot of mom and pops. Some of them have the benefit of having a franchise like KOA or Yogi Bear's Jellystone Parks. But overall, there's a whole lot of mom and pops. And these mom and pops, I mean, to pay them a very nice price and a fair price for their RV park still leaves a lot of potential upgrade. I mean, you can't imagine a typical mom and pop family owned RV park adding, a $2.3 million water park and a 5-acre swimming lake with a beach that costs $600,000, and the Wibbits are $200,000 or $300,000 more, and all this other stuff. I mean, it's just beyond their scope. And so a professional operator that comes in and transforms this park has a lot of potential upside. But as you can imagine, running a park like this is not a small thing.
Yeah. Well, what is involved with like the typical operation of an RV park? And I guess it kind of can get very complicated in the sense that you mentioned there's 4 different types of parks. And of course, kind of like the, or maybe lack of a better way of saying it, maybe the higher end park, which is the destination in and of itself, where you can have like people are coming there for the amenities itself. It's not that they're just, driving by or driving through. But what does a typical operation for most parks consist of?
Yeah. So for the overnight parks or some of the other types of parks, you could have one person or maybe a couple and a part-time maintenance person, running those. A destination park is completely different. And as you'll see, it's not something for the faint of heart. They have over, and I'm talking summer, assuming that summer for most listeners would be the in season, although there are exceptions to that. But I mean, we're talking about over 100 staff people to run one of these, especially on weekends in the summer. So it's not a small thing. I mean, we've got lifeguards and food service vendors and housekeeping, because they have a lot of, they put cabins and glamping units, and they call them park models, all kinds of things at the park. They stationarily put those there, permanently. And Well, that means there's going to be housekeeping, and there's going to be maintenance and groundskeeping, and concession stand workers, and people to lifeguards for the Wibbits and all that stuff. So it's a big deal. So what it's doing is it's real hard to run. It's also creating massive barriers to entry, because I don't think a lot of people are going to plop down another RV park next door and try to undertake that type of effort to do this.
Yeah, that's very true. In the work that you're doing with your operator, are you targeting RV parks of any particular size or geographic location, or are you just looking at it more just wherever you can find value?
I'd say, mainly in the Sun Belt states, I'd say from Charlotte down through Alabama, Texas, Phoenix, Southern Smile area. As far as size, this destination park, everyone I've seen has been close to $20 million. So not a small thing. They might have been acquired for 2 or 3 or 4 million, but the total all-in capital budget for these destination parks is, many times that.
Yeah. And you kind of mentioned, working with the operator and then adding RV parks kind of to your fund. Is there a particular type of asset allocation that you're looking for in terms of balancing out these different types of assets within the fund? Um, with kind of mixing in with like the mobile home parks and the self-storage as well?
Yeah, we're very opportunistic in the sense that, Mo, we're just looking for the best opportunity at this time. And so while we started the fund expecting that 40% of it, maybe 50, would be self-storage and mobile home parks, and maybe a smaller percent RV parks, honestly, we haven't seen a lot of opportunities in mobile home parks lately. We have seen more opportunities in other asset types, actually in other capital structures. Specifically, I'm talking about preferred equity right now. Preferred equity is, sits between the debt and LP equity, common equity. And it provides both lower, theoretically lower risk, and it provides current cash flow from day one like debt does, but it also has upside like equity. It's limited upside, and it can be very accretive, very profitable for the owners to use pref equity like this and then take it out upon refinancing in a couple of years. At any rate, we didn't expect to have that in our mix at all a year ago when we started this fund, but we do. And we're going to continue to be opportunistic in the sense that we're going to be looking for the best opportunity at this whatever given time.
Do you want to share any final thoughts about RV parks or anything else in general with the listeners?
Yeah. So one thing I was really concerned about is the gas mileage. When gas skyrocketed in price, about a year ago, I thought, 2022 is going to be a bad year for RVs. Well, then I actually looked into it. I was surprised that, type Class A motorhomes get 7 to 13 miles per gallon. That's not very good, but that's the worst of all of them. Class B get 18 to 25 miles per gallon. Class C get 14 to 18. That's 14 to 18. That's better than my Toyota Sequoia.
Yeah.
And, even the Class A 7 to 13 miles per gallon is not that much worse than my Toyota Sequoia. So it's not as bad as I thought. I really do believe these are recession resistant. People who can't afford to go to Disney World this year might be able to afford to go take a week at a rented RV site in an RV park. And so that's one thing I really like. That's another thing I really like about RV camping. And just, as a last thought, I would say this to anybody, whether it's multifamily, self-storage, or whatever. It's not something to be waded into lightly. It's like my son, he has a land and timber business. He has about 1,200 acres around this area that he owns. I was like, maybe you should start an RV park and just throw it over on, one of those RV camping websites and just let people, it's not something like that. to do it well, it's going to take massive focus. And that's why I was talking about the one thing earlier in the podcast. Don't wade into this, on the side. If you've got extra land or if you can buy land, it's not something to be taken lightly. You'll end up being a mom and pop owner, and you'll end up probably having more headaches than you do profit. And you'll probably be tearing your hair out. It will not be a side venture. That's why I like the idea of investing with a professional. And, our friend Brian Burke wrote The Hands-Off Investor. The Hands-Off Investor is a great guide. It's very hard to get through, but it's almost 350 pages of meat on how to evaluate a passive real estate investment. I highly recommend people go out, get that book, think through that, and then go through those steps in the book and put your money with an expert operator.
Yeah, I actually have that book on my bookshelf. It's actually a really great book. I'm surprised that you brought that up, but it's a great resource. There's a lot of stuff that gets into a lot of great detail in that book.
Yeah.
And a lot of things that I think even people out there that are probably syndicating and doing deals probably don't even know themselves, to be honest with you.
Right.
Yeah, it's a great resource. Definitely. It can be a little hard to get through because it's very textbook-like.
Yeah.
But man, is it phenomenal. It's a great resource. Highly recommend it as well too.
Yeah. Yeah.
Paul, how can people find out more about you and Wellings Capital?
Yeah, I've got an RV park special report. It has a lot more detail than we covered today. And you can get that at my website, Wellings Capital. That's WELLINGS, wellingscapital.com/resources. You can get that RV park special report. You can get access to my book on multifamily investing, another book on self-storage investing, special reports of other types as well.
Paul, thank you for coming on to the show today. I enjoyed the discussion and I learned a lot about RV parks as well too.
All right, Mo, it's really an honor. Thank you.
Yeah, thank you for coming on. And thank you all for tuning in today. And until next time, have a great week.
Thank you for tuning in to this week's show. If you are interested in learning how alternative investments can help you build purpose-driven wealth, sign up on the High Rise Capital website to receive our monthly newsletter and free investor ebook. Lastly, if you enjoyed this episode, don't forget to subscribe and leave a 5-star review. Thank you for listening to Purpose Driven Wealth, the podcast for empowered investors.